The name of this event is Building a Just Future, the road to a more inclusive economy. It is backed by Just Capital, and it is also backed by Laurel Strategies. We have the greatest group of people we could have to have this conversation this afternoon. And let me just introduce them. They need no real introduction, but Paul Tudor Jones is here. He is, of course, the founder of Just Capital. He's the founder of Tudor as well, and the founder of Robinhood, and has so many unique insights and thoughts about where we are and hopefully where we are headed. Adena Friedman is here. She runs the NASDAQ, my second home, my home away from home. We have the image, but I'm not in New York right this minute behind me. And then Robert Smith is here of Vista Equity, really one of the most remarkable people that I've had the opportunity to get to know in such a long time, and has done so much for this country and has so many different insights and perspectives on where we are headed as well. So we want to have a conversation today about what it means to have, quote unquote, just capital, what it means to be a just company in this country today. There's lots of questions that are swirling about how we're dealing with COVID, how we're dealing with racism in America, and the role that business is supposed to play, and how business can embrace and engage in this moment. And so I'd start with you, Paul, because you've been spending so many years now thinking about this particular issue. But I'd ask you how you think that companies can really address the issues of today, right now, what it means to be a just company in this environment that we're living through, which has been so heartbreaking for so many.
That's a great question. And let me just answer it by saying that when Just Capital started 7 years ago, I had no idea at that time, I don't think any of us did, that we would evolve to where we are today. And where we are today is, I think, we're going to look back and say the combination of the pandemic and George Floyd was the seminal point in American history, the galvanizing moment when we absolutely changed the way that we were doing things at a variety of societal levels. If you think about how we got here right now, we went through the tumultuous 60s when Robert and I were kids, and we thought in the 60s, certainly we had passed the laws, we'd done a whole variety of things to address racial inequality. But something happened between then and now, where here we are at 2020, and I think the George Floyd episode has kind of proven that we really haven't made the progress that we thought we should have. Why is that? Why is it that we didn't advance like we probably should have since the 60s? And I'm going to postulate something, and only because I've been living it so much, and maybe I'm overestimating the importance of it, but because I've been living it so much, I truly believe it's the root of everything. If I go back to 1970, and that period, 1970, right after we'd gone through that groundbreaking legislation of the late 60s. In 1970, again, Milton Friedman famously said the purpose of a company is to make a profit. So what is the relevance of that today? Well, the relevance is that it created in people's minds the belief that in the single largest component in our society, which is where we work, right? 16 of the $20 trillion of our GDP occurs by the private sector. 40% of our daylight, of our living time that we're not sleeping, waking time, we operate at work. So when he said the purpose of a company is to make a profit, it took a very narrow, myopic, and transactional view of what companies were supposed to do. So if you think about the corporate world, you've got 5 stakeholders. You have shareholders, employees, customers, communities, and the environment. When you just look and say that the only thing that a company has to worry about is making a profit, it gives that company a pass not to pay attention to pay equity, not to pay attention to gender equity, not to pay attention to racial equality, not to pay attention to a whole host of social factors that at the end of the day are the basis and foundation for a strong, vibrant society. It is no wonder that when the pandemic hit, now that 50 years later, with again with our whole society thinking it's all about me, the money that I make as a shareholder, with the Gini coefficient or the income disparity, the greatest in the world in the United States, when the pandemic hit, it's no wonder that the greatest social problem manifested itself in the country with the most fragile social infrastructure. So, and again, let's just take it a step further. If I see companies and businesses that it's all about shareholders and money, what message does that send to, for instance, a police union? A police union says if they're thinking it's all about what they can get, then I don't care if my member has 18 violations. My job, myopically, is to focus on the health of my membership. I don't care about the stakeholders. I don't care about civilians. I don't care about the rest of society. I'm going to stand by that person, man or woman, because they're police. That's my job. Everything else is binary. That's it. So we've lost that social connectivity. And I think it actually started with this new modern form of capitalism, which I think, thank God, the Business Roundtable threw it out a year ago. I think that has been one of the larger negatives associated with American society in the past 50 years.
Hey, Robert, let me go to you. And I'm hoping maybe you could tell a little bit of your story as well, because it's a remarkable one. And just give us a sense of how as an African-American man in this country, you're feeling right now, but as a business leader and philanthropist, what you think can be done about it as well.
Sure. And I think, Paul, his presupposition, I think, is a fair one that put us on this vector. And when I think about, growing up in the late 60s, early 70s, there are a couple of dynamics that I think made a huge difference in my life. One, most importantly, was the opportunity to now go to desegregated schools. And here's why that's important. As I was growing up playing, in band and sports and, AP physics with people who looked different than me, different religions, different holidays they celebrated. The dynamic, we were on a team together. We went across town to play another team, not to play the other. And what's interesting today, when I look at those same schools that were desegregated, they've almost resegregated again. And so there's a lack of understanding that was starting in the 60s and in the late 70s as there became, call it, a flight away from the cities and away from these communities that were becoming much more integrated because housing became more integrated, schools became more integrated, sports became integrated. And frankly, that started to build some wonderful fabric of what America should be. Now you fast forward to today and you see a lot of social isolation, not in the form of a pandemic, but that people are choosing and have chosen to do over the last 20 and 30 years in terms of where they went to school and who they associated with, what teams they played on. And I think that's one of the dynamics that has actually created a fraying. Before you saw more integration of, call it, the police force into the community. And now it is, again, a question of the other. Now, the dynamic of the economic vector is once you decide I'm not going to do anything that's unprofitable to my business, then you withdraw the branches of the banks that are in those neighborhoods, because it's hard to support a branch operation, especially as banking became more competitive, more modernized in many cases, in these communities where 90+% of the folks in those communities who were businesses were sole proprietors. They were 2 and 3 and 4 employees, not hundreds of thousands of employees. So that created banking deserts. When you create these banking deserts, it actually inhibits the infusion of capital into those communities, which are the typical employers, those small businesses of the people in that community. And then, of course, it creates a dampening effect on the wealth opportunity. We know we all in Adena and today, NASDAQ 10,000, very few African Americans actually own stock. So one part of the community of Americans are saying, this is great. The stock market's performing. The other part of the American community is saying, that has nothing to do with me because I still have to go out to work every single day, expose myself to COVID for pay that actually keeps me still at a level where I don't have the opportunity not only to own my own home, but to own stock, right? There's some arguments, Ray Dalio and I talk about this, that maybe you should be better off owning stock than a house anyway, but they don't have that access. And so that has created that wealth gap in addition to compounding the income gap, which ultimately creates all the other sort of inequities on healthcare, et cetera.
So, Adena, let me ask you this. I think of you as somebody who spends a lot of time with the investment community. And I think there's a real question mark right now about how companies are going to address some of these issues, what the relationship is going to be between a company and labor, how much people are going to spend, how much companies are going to spend to pay people. I think the entire COVID pandemic has opened people's eyes to the importance of people who are working at cash registers, who are really on the front line doing essential work. And the question I have is whether you think that this is just going to be a moment in time when people are going to talk the good talk and there's going to be quote unquote hero pay, or you think that this is going to fundamentally change the dynamic, and not just because managements and CEOs say they want to do that, but because investors are not just going to allow it, but they're going to encourage it.
Thank you very much, Andrew, because I think it is really important to bring the investment community into the discussion here. And so I want to start by saying I agree with Paul, and I want so much to agree with Paul that this is not just a moment. It's a moment where change is going to start. And it's that seminal moment where we all reflect on the society around us. I think it started with the COVID crisis, where we have recognized now all of the people who have kept this economy going, all of the people who are on the front lines, who are the healthcare workers. They're in the grocery stores. They're doing the deliveries. They're in the factories. They're the ones who have kept this economy going. They're the ones who've allowed us to stay safe in our homes. And they're the ones who've had to expose themselves and to the risk. And yet they're the ones also who are not getting the benefit of the economic involvement, I would say, in this country. And then on top of that, you see this terrible, tragic, and horrible situation where an individual is killed on video by a person of authority. And you say, this just can't continue. So I do think this is a seminal moment that should drive change. Now, let's bring the investors into that discussion, because I also agree with Paul that moment back in 1970, where it was determined that profits are paramount and investor returns are paramount to all else, I think actually you have to recognize it's a relationship between the company and the investors. Because not only did it give the companies a license to focus on it, it gave investors power over the companies to say, nothing else matters, get me my return. And I think that is a challenge. That's been a challenging relationship now for a long time between maybe companies and CEOs who wanted to have a broader role, and investors who, and particularly certain investors in particular, who really kind of come in and say, your job is to deliver me a return, and that the rest of it's all ancillary. Now, I think at this point, over the last couple of years, what's been wonderful has been two things. One is the ESG movement which started in Europe and has come to the United States, It's not just about the environment. It's environment, social, and governance. It's about having more inclusion in the workforce and in your governance. It's about having a role in your society, and it's about the environment. So, and investors are empowered now to actually have that as a part of the dialogue with companies, and that's moved to the United States. And then on top of that, with the BRT also saying, as company, a collection of important CEOs in this country saying, our role is beyond the shareholder. It's an and, not an or, but it's beyond the shareholder. It means that we, by doing the right thing for our employees, by doing the right thing for our society, by doing the right thing for the environment, it actually creates less risk over the long term and allows us to have a longer term horizon on delivering those returns to our shareholders. So I think this dialogue is the most healthy I've seen it since I've been working at NASDAQ, to be honest. And as a CEO myself of a public company, it's refreshing to know that I can have a discussion internally with my board and with the shareholders about what our broader role is, in addition to making sure we're delivering returns to them, and we are creating wealth for them as well. So okay, I believe, Andrew, that's a real moment that we can look forward to.
Hey, Paul, I want you to jump in on this, though. But here's the question, though. Has COVID made ESG, if you will, more or less important? And let me just posit this. Before COVID happened, Ed Bastian, CEO of Delta, came out publicly and said he was going to spend $1 billion effectively buying carbon credits over the next decade, $100 million a year annually. Clearly, the airlines right now are going to be challenged, and they're going to be challenged for years going forward. There are lots of industries that are actually going to be challenged by COVID that have made either commitments or had ambitions to make commitments towards things that might make the world a better place, but are going to be hard to pay for in a challenged economic environment. How do you square that circle? How do you see what's going to happen? What do you think the result of that's going to be?
I think COVID clearly took survival issues at every level, and prioritize those above everything else. So if we just think about ESG, environmental, social, and governance, those survival issues became the only thing that mattered, whether you're a not-for-profit. I sit on 2 environmental boards and involved in a couple of poverty-fighting organizations, and clearly in the events of the last 2 or 3 months, everyone's concerned about the welfare of our neighbors in need. So I think what it's done is it's the focus on ESG is there. We've shifted the emphasis among the 3. And then clearly George Floyd has taken the ESG component and I guess the social component and the governance component and really, really amplified that. I would say on the governance side, it was funny. 2 years ago, Intel was the most just company by our rankings. Remember, our rankings are derived from our polling of the American public. So where we come up with our rankings is by asking the American company on a variety of issues. They tell us, and then we interpolate that in a quantitative fashion to come up with that ranking. So Intel was number 1. And the then CEO came and said, and we were talking about governance issues and social issues. He said, in 2016, I determined that we weren't doing, or our board determined that our workforce did not look like the population that we served. And that lack of diversity was probably hurting us as a company. And so he said, we made a 5-year plan that was going to end in 2020 to hit certain numerical targets. And we do what engineers do. We set targets. We had a 5-year plan. And we said, we're going to move there over that period of time. And we had explicit targets that we were going to hit with regard to both gender numbers as well as racial numbers. And he said it was really amazing. People said that there's no such thing as female programmers in Silicon Valley. Guess what? There were. People said that there are no African Americans who can program and develop. Guess what? There were. And he said we achieved that target. in early 2019, almost 2 years ahead of time. I guess the point being, now they're the only company out of the Russell 1000 that disclose by race and gender the employee makeup. They're the only one that do that. My guess is they're going to be the bellwether. They're going to be the pioneer. I know just from the conversations that I've been having at my own company, variety of not-for-profits I sit on, I think that, again, we hit the pause button in 1970. We hit the pause button on many of the reforms that our parents and some of our grandparents put together in the 60s. And I think what you're going to see is and again, I go back to the Business Roundtable in August of 2019, who changed. Remember, the primary purpose of a corporation was to serve its shareholders. That was what the Business Roundtable adopted as its primary mission statement in 1997, the Business Roundtable being the top 500 companies in America, the CEOs. They changed that last year to say that we have to serve all stakeholders, take all stakeholders into consideration. That's a monumental change. And again, we're starting to see, and I think COVID is going to accelerate that concept in every boardroom, in every CEO's mission that there is in the country today. So I'm excited and optimistic about the future.
And Andrew, if I could just jump in for 1 second, because we see this ESG topic, we've launched into an advisory service for our listed clients, actually for any corporation, to help them manage their ESG programs. And then we have a technology tool that allows them to report more efficiently. And first of all, and this is a new area for us, and we had some really good momentum coming into 2020, and then COVID started happening. I thought, oh gosh, this is going to end up the pause button. I was really been worried about, is this momentum just going to dissipate because there's so many more things to think about right now? And the answer actually is not at all. So the level of interest and the pipeline of opportunities and the level of conversations and how companies are focused on it is just as high as it was before, maybe with some, as you said, Paul, with some reorientation towards the social side and the environmental side. I have to say, it kind of was definitely a lot of environmental focus, but it's also the social focus coming into the priority list. And I've been really impressed by that, because that actually has been a concern of mine, can we maintain this momentum in a down cycle? And I think the answer is yes.
Yeah.
Hey, Rob.
Yeah, go ahead, Andrew.
Robert, jump in. But the other thing I wanted to ask you, Robert, specifically is this, because I hear it from executives at companies all over, including companies that I'm associated with, when it comes to hiring. And it goes back to the issue that Paul said. I know lots of management say, we want to hire more African Americans and have a more diverse workforce. I think there's a lot of people who say that. And then they say, but I either don't know where to find them, or the pipeline's not big enough, or I haven't figured out the right person that has that same experience. How do you think that people should answer those questions? Because I'm sure you get that every single day.
Yeah, for sure, and even more now. And to a great extent, a lot of those are excuses to not be open and thoughtful about building infrastructure to find these people. And I'll get to that in a second. But just to continue to pick up, what has actually occurred is that the S part of ESG has run, screaming in our faces today that the inequality that America is presenting in its economic structure is not sustainable. And if you really look at, the murder of George Floyd, I think more than anything else, it was a period of time when we all had quiet in our lives because we were at home. Well, only 20% of African Americans were at home. The balance still were outgoing in these frontline jobs, et cetera. But realizing that the economic imbalance in our country is just not going to be sustainable. So to give you an example, one of the things we were doing at the BRT is we just formed a new committee me and a few other folks are on, that's going to focus on 4 key areas for, frankly, it's about, racial inequality and injustice. So we'll focus on criminal justice. We will focus on finance. We're going to focus on healthcare, and we're going to focus on education. And it looks like we'll likely have 20 to 30 of our members focused in each of these subcommittees, really designed around, okay, how do you create sustainable systems, which are in the finance community, is how do you drive sustainable capital into, the communities, into these businesses? How do you use technology in some cases to not only do that well, but manage the healthcare disparities, which we can do much more effectively now than we could, call it 8 or 10 years ago. How do we think about it in the context of criminal justice? How do we think about it in the context of education? And I think with as you start to get companies, because the companies are controlling vast resources, people, ideology in this country, to now think about how do we put not just a one-time fix, a one-time donation, but a system and systems in place to change. Some of the systems are hiring systems. I had probably a half a dozen calls from CEOs of investment banks to private equity firms saying, Robert, I'm really taking a look at this, and I realize we go to these 1 or 2 schools, and those 1 or 2 schools only have 4 or 5% African Americans. Well, guess what? No wonder our representation is low, because we only recruit out of there. So enabling them to evaluate people with different backgrounds. We have some platforms that we have, InternX, for instance, and others, things that we do at our firm, in our companies, that gives us the ability to actually evaluate all candidates, blind of their demographics, and look at their capabilities, kind of point one, but also looking at providing solutions that actually onboard people who may be from a different background and enhance their training, enhance their relationships with senior managers in a way that A, is natural, okay, and B, is actually progressing them naturally through the organizations. We've seen a dampening of the number of African-American CEOs of Fortune 500 companies versus when I was coming out of school in the 80s. And it's because there hasn't been the developmental pipeline that there has to be. And like in all businesses, you have to create the pipelines. And so in the excuse, I can't find them, that means you're not looking at the pipelines. We're graduating tens of thousands of kids a year. You just have to find those kids and actually get them the exposure and get them the opportunity to progress in your organization.
I have a question for all 3 of you, which is, this is an issue, and a lot of companies are trying to take this on in the private sector, meaning trying to work on hiring, trying to work on diversity, trying to work on these ESG issues. But to some degree, when it comes to police brutality in America and so many of these other systemic issues, there's a political dynamic. I hate to say that, there is. And the question is what the role of business, and I know the BRT is trying to be involved, but how far you can go. A year and a half ago, a number of big companies got involved in the gun debate for the first time, where BlackRock started saying, we're not going to do business with certain types of companies. I had somebody call me yesterday who said, we manage a lot of money for the police unions. Maybe we should have a conversation with them about what to do. I've had other companies, you look and obviously people lobby in Washington for all sorts of things, typically on behalf of their companies, but they give money to attorney generals, governors, at the very state level. And a little bit of rethinking about how to do that and what to do and how to be involved at a very, very granular level. Do you think that companies should do that? Shouldn't they do that? It becomes political and very quickly.
Yeah, I mean, I'll step into this. I think companies have that responsibility. You have to think about, and I tell all my companies and my employees and employees of our portfolio companies, that you have to think about yourself as part of a community and what is happening in that community that supports a sustainable business. If you don't have a community where you think you can educate your children, or that certain members of your community's children are threatened because of the color of their skin, because they're out going for a jog or driving around, doing what teenagers do, then it is up to you to actually use your influence on whoever, it's the politicians or whoever is in that community, and say this is not the right thing to do. but it is incumbent upon us as stewards of capital, as, I'll call it, CEO statesmen in this world, to actually put forward what we think are the right values that make a sustainable economy. We as Americans, and I think hopefully we realize this, there are other economies that are are growing faster than ours and can easily eclipse ours within the next few years. And in order for us to be effective, we have to really actuate every single citizen in America to be their best selves, to contribute to what is, not just the American dream, but American productivity. And I think if we create isolationist systems within the country, I think we will never get there. And I think it's going to create a harder time for not only us, but our kids and our grandkids. So I think it is incumbent upon us to make a statement and to actually take action and drive that action with whatever, call it, platform that we have available to us. If you are a senior manager at one of our portfolio companies, then you should look to bring in interns to train them from your community so that they have a greater economic opportunity and understanding of what we're doing in our business and how that contributes to the overall growth and prosperity of America.
Right.
And Andrew,
hey, Paul,
sorry, go ahead.
No, go ahead.
I think that you have seen CEOs stepping into some bigger debates, and I would say that it's not without risk. But I completely agree with Robert, and actually a comment that Paul made that Intel mentioned, which is until our own employees look like the people we serve, we are actually holding back our own performance, right? So what that tells you is that this is a virtuous cycle of opportunity that then creates better performance. So I do think that we have actually some real financial benefits in addition to societal benefits of opening that opportunity to more people and creating a safe environment for people to live and work. And so I do think you see more and more CEOs stepping up on issues that really matter. It is not without risk. And oftentimes you'll see CEOs stepping into things that are, frankly, at least consistent with the business they're in or the mission that they're serving. And so they can't step in on every single issue that might come along. But we're in this particular moment, I think we all have a chance to step forward and talk about what we are doing inside our organizations, how we want to make sure that we are playing a role in our communities, and then also, publishing information data so that we can also, kind of expose ourselves to the opportunity to improve, frankly.
Hey, Paul, let me ask you a question
can I also answer that?
Yeah, please.
Just let's not forget that one of the driving forces that destroyed apartheid was businesses refusing to do business with South Africa, investors divesting themselves of investments in South Africa, and businesses withdrawing from South Africa. Businesses have a huge role in society to push social norms that are for the betterment of that particular society.
Let me ask you this, Paul. And I think today the public looks at the stock market and therefore looks at corporate America and thinks a little bit what Jim Cramer said last week. He said the market has no conscience. They look at the market and they say to themselves, how is it possible that this market is as high as it is? We have double-digit unemployment. We talk about big statistics when it comes to unemployment, but there's a real name and a family that's not getting a paycheck. And they look at this system and they say there's something wrong here. And part of it is that they're not participating in it, right? And that's something that Robert was talking about. But do you think the market has a conscience?
I think the market at the moment is obviously being driven by, it's driven by really two things. Obviously, the combination of fiscal monetary policy, which is unprecedented, plus the market sees the other side of the COVID crisis. That may or may not be correct. I do think that what this stock market rally with COVID has done, it's done nothing but accentuate the income disparity and income inequality in this country. I think the next election is going to be about which candidate, whether it be in the presidential elections or in the congressional elections or local elections, which candidate is going to resolve the yawning gap between those that have not participated and those that have taken an outsized line share of the spoils. I think in 2010, 50% of the wealth in this country was owned by 388 individuals. Today, 10 years later, that number is 62, own 50% of the wealth in this country. The next candidate, every candidate is going to be judged on whether they can take that back to a number that seems more, I guess, more realistic and more in line with what the general public wants. The number one thing that you find with great income and disparity in income inequality is a mistrust of the populace of within themselves. And that's, of course, what we have now is the great divide in this country. And I think I saw a poll, 71% of Americans think that billionaires must have gotten or made their fortunes by cheating. So you have a lot of mistrust and distrust. I think when I think of the world, and particularly the corporate world, you have those five stakeholders. And then above that, you have the government as a referee. And I think, again, the next government that we elect is going to be someone who finds more balance in the way that the fruits of our labor and our society are distributed.
Well, let me ask you about that, and maybe Adena and Robert can comment on this. Do you ultimately think typically business has not wanted to be regulated, right? I mean, business has resisted regulation. Do you think that some of these issues should be regulated?
I'll tell you, I'll give you some perspectives how I think about it.
You saved me.
What's that?
You saved me.
Yeah, I'm giving you a chance. You owe me for this one. I think, frankly, that a number of businesses can move with what I call a self-regulation dynamic, and this is kind of a perfect opportunity to do it. And I'll just pick one example, being banking. You know, if you take the largest 10 banks or so in America, they generated over the last 10 years since the great financial crisis, somewhere on the order of $900 billion in profit, net income. And if you think about it and you said, okay, what if you contributed 2% of that to the banks that bank this capillary banking system for these communities that, frankly, they withdrew their branches from or never opened a branch in. And, you know, if you think about a corporate edict thinking about not just shareholder, but, you know, stakeholder capitalism, if you do that by industry, you say, okay, let's actually drive some of the profits of those businesses into the smaller businesses or institutions, which might be educational, they might be, you know, financial, whatever they might be, to actually regenerate those economies, those small economies. Because from my perspective, I think the best thing we can do in terms of the wealth gap and income gap is actually bring up the bottom. And I think corporations controlling so much capital and capacity and know-how, if you actually drive that know-how and that capital and that capacity down into the smaller businesses or those communities, you'll see a rapid expansion in the productivity. You know, in the business I'm in software, a small business that implements some very basic software tools, which might be, you know, general ledger tools and payroll tools and productivity tools and online selling, et cetera, they get over a 900% ROI on those sort of investments, but they're so starved from capital, going paycheck to paycheck and, you know, balancing and managing the business using credit cards, et cetera, because they don't have really efficient access to capital. It inhibits their growth and inhibits overall productivity in our economy. So I don't necessarily think the government's the best folks to actually do that work, but conscious and deliberate activity by companies is the right answer to actually really fulfill the mission of stakeholder capital, because it supports the communities that ultimately their employees are working in the communities and the cities and towns and counties where they are selling their goods and services. So rather than just continue to manufacture dividends that go to the 362, why don't we take some of that and manufacture opportunity and drive capital into the smaller businesses in these other communities that are frankly really
Right.
getting devastated during this time of COVID.
So, Andrew, I'll take a slightly different approach to the topic. So, as a highly regulated business myself, so NASDAQ is a highly regulated business. I can tell you there are a lot of pros and cons to that. But there is a balance that needs to be struck. I think that the dialogue that companies can have with investors today is a broader dialogue. And the investors are expecting more of companies. Frankly, the investors need to expect more of themselves too, I should say. But they are expecting more companies, but it allows companies then to make those kinds of programs that Robert mentioned and have an active and hopefully productive dialogue with investors to enable them to come up with these programs that make a difference. And frankly, let's recognize that those small businesses that Robert just mentioned that suddenly have access to capital they didn't before will become very loyal customers to those banks. It's a time horizon of return. It's not I'm never going to get money paid back for this. It's a time horizon of return. And so I think that I would say that that's a healthy dialogue to have with investors and things that can be done without regulation. I think that the other thing that can be thought of more where regulation can actually help, there was a rule that was put into place around accounting, believe it or not, that really made it so companies were disincentivized from giving equity to their employees. And that really changed the culture in a lot of companies from an equity culture to an equity culture only for the top. And, we're very proud of the fact that we give the vast majority of our employees equity, but that sharing that equity down through the organization and making everyone an owner and giving the opportunity for every employee to have that chance for wealth creation from the company where they work is a wonderful part of capitalism. But there are regulations that can change that could potentially make that incentive structure more aligned. And then, of course, there's the disclosure regulations or requiring certain governance. And I only want to say this, that if you look at the role of a regulator like the SEC, they don't just regulate public companies. They regulate every private equity firm. They regulate every investment management firm. They regulate every broker-dealer. So they have the ability to create disclosure obligations that cut across both public and private companies. And the one concern I have is there are twice as many companies, by the way, in private hands that are in public hands today. So if we could try to look at disclosure regimes in a way that's balanced across society and it doesn't create yet another gate to going public, I think that would be a healthy way to look at regulation.
All right, I have a hypothetical for all three of you, but I'm going to start with Paul. Robert's not going to save you this time, but it's a hard one. So one of the things, Paul, that a lot of companies and a lot of managers are seeing throughout COVID is they're seeing their employees work from home, and they're oftentimes saying, at least in private, you know what, I'm realizing that we can do more with less. That maybe actually, we may not need as many employees as we thought to be as productive, and that this has been a remarkable lesson in some cases. These are successful companies. By the way, there's lots of companies that are clearly challenged that are involved in layoffs now because they are demonstrably challenged businesses. The question I have for you is, a successful company that looks and says, I can be more productive with less, that ultimately lays off employees, are they a just company? What do you think of that? I think it's something that people are really wrestling with right now.
Yeah, I do think we're going to have, it's going to be, I think this is one of the more intellectually challenging times and stimulating times because, gosh, 10 years we're going to look back and think about all the profound changes that COVID brought, and you just highlighted one. Think of it this way also. Robert talked about how he found his developers had an extra 2 hours a week. The average commute time in New York City is 36 minutes each way. So if we take I think there's something like 50% of Americans were working from home. Certainly white collar Americans were working from home in April. And just if we take New York as an example, if you now have saving, let's say that people can do 95% of the job. Let's say half of them can do 95% of their job just as easily from home as they could in the office. Well, you just added 6 hours of productivity to companies in some way, shape, or form. And that productivity could either be you've added 6 hours of productivity to society that could be shared. with the company. It could also be me time. We're going to look on this and see that there's a whole new approach towards work-life balance. The one thing the American public has told us is they've told us creative destruction is a good thing. Creative destruction is something that we should not penalize companies for. It's so funny because I always thought Amazon would get penalized in our rankings because of the number of businesses that they put out of business. But if you look at the polling, the American public says as long as they are creating socially beneficial products and creating jobs, they're the number one job creator in the country, then we don't care. That's part of what has made our economy so vibrant. So to answer your question, and I'm just going to respond is the way the public says to us, creative destruction is a good thing, as long as society in general benefits, as long as with regard to their employees, both those that they have and those that they may hire in the future and or ones that they've had to let go, they treat them in a fashion that they consider to be just. We did a lot of polling on what happens if you have to lay off someone. What's on paid sick leave and a variety of things. And of course, the American public says we want companies to be generous. We want companies to be benefactors to us. We want them to think of us in the same way, in that same social contract, in that familial way that we think of the company. So I think if you find that companies are going to downsize because they've lost more productive ways to do it, they're clear. I think they're pretty clear guidelines along the way to do that. And when I say there's something with regard to paid sick leave, there's something with regard to severance. We've done a bunch of polling on it. You can certainly contact our organization and get guidelines. So I think in general, creative destruction is a fact of life, sad, but a fact of life. And that's, again, why we've got the greatest economy in the world. And I think anything that impairs that is going to be an issue.
Adena, what do you think? I'll make it even more complicated for you, Adena. There are companies that say to themselves, I need to maintain the dividend. Got to maintain the dividend. But to maintain the dividend, I may have to lose some employees, especially in this time. That's a conversation happening in boardrooms everywhere. Are they just?
So I think the first thing I want to take the broader topic, and then I'll discuss the dividend topic. I think that in terms of the broader topic that Paul raised, we are part of the great thing. One of the great things about the United States is that it's a super dynamic economy. And so to say that you have to hold everything in place and be static in your approach to your employees when you're living in a dynamic world, I think it's very difficult. And it's frankly, at the end of the day, not the right path, because you have to allow yourself to evolve. You have to allow companies to evolve. But I agree also with Paul that it's all a matter of how you work with those employees, either to retrain them, to find them resources where they can get training, or to make sure that they land in a way that allows them this time and space to find the next thing. But to make it so that we have to hold ourselves in a static state in such a dynamic economy, whether it's this time or any time, I think is a very, I think that actually in the end of the day will hold back progress. But I also would say that we have to be much more mindful, though, of how we're doing it and who we're doing it to, because the challenge is that, as you pointed out, the social safety net in the United States is very fragile. So is there a way to make sure we have better training capabilities? This is one of the things that BRT is really going to focus on, is education and training and ability for people to live in a more dynamic economy, to find work in a dynamic economy, to find that career progression in a dynamic economy. So now getting to your very specific point on dividends, the way I look at dividends, and this may not be a popular answer, is though that it's like an unwritten contract with your investors. And many of the investors who take dividend stocks, who buy into dividend stocks, are retirees, and they really depend on that income to manage their lives when they're no longer receiving income themselves. So it becomes their income generator. It enables them to continue to pay rent or their mortgage or to live their lives. And we do have to remember, and while Robert did point out how we definitely have disparity in equity ownership, there is still 50%, more than 50% of the adult population of the United States own equities. And they are, and particularly in the income generating equities, that's a huge form of income for them as they manage through a much longer life as a retiree. So I look at dividends as a social contract, and that idea of maintaining that contract with them while a company is managing through a dynamic time. I don't think it's like I have to do this and therefore I have to pay my dividend, therefore I have to lay off people. No, I have to manage in a dynamic space, but I want to maintain my social contract with the investors. And that's, I think, how most companies view it.
Right. Hey, Robert, what do you think? And speak also just to the issue of how to communicate that. The conversation we're having right now is a pretty sophisticated conversation. And I'm not suggesting the public can't understand or have a sophisticated conversation, but I think it's very hard for an employee at a company who sees a dividend, for example, being maintained and them losing their job after the CEO says that the employees are the most important thing at our company. They say, well, where am I in the priority? Where am I in the creditor stack here, really?
Right.
And I think it creates, at minimum, confusion, at worst, anger, frankly, about a system, and how we should think about that.
That's a great question. And it's one, when you think about it, there are social contracts like dividends that do have to be, maintained, because you do have retirees who no longer have the capacity to earn, but need to have in some way of capitalizing on the work they've done and the money they've saved and they've invested in this way. That said, when I sit back and look at this, Andrew, to me, the second part of creative destruction is innovation. And that's the world that I get to live in most often. And what you actually see is innovation creates more jobs typically than get destroyed or are eliminated through other means. Our average company delivers a 650% ROI on the products that we sell to our customers, which makes those companies more efficient in what they do, which should generate more profits, which they hopefully can then use to deploy in more effective means, including dividends. Our average company in this world of innovation, from the time in which we buy it to the time in which we sell it, we increase the total number of jobs by 20%. And so this whole dynamic of infusing technology into the mix, this dynamic world that every executive is faced with, you have to realize the creative destruction that comes from supplanting what might be manual labor jobs with more innovative technology solutions capabilities actually leads to a greater outcome, an expansion in the overall pie. My challenge has always been, how do you make sure everyone has access to that pie? And that, to me, gets back into education. And, the reskilling of workers also has to be the skilling of, young people to participate in this economy. That's the part of the social contract, I think, that needs more refinement and needs more work. We need to have more on-ramps into the digital economy where there is the innovation, where there is the growth and the opportunity. And that's what's going to create a more sustainable capital system for all of us. But, from my perspective, that's where the gaps have occurred. We haven't created enough on-ramps for all citizenry, which is why you start to see increasing gaps in the wealth and income, because many of those folks don't actually know how to, or they haven't had the opportunity to get onto the on-ramps into what is, again, the greatest economy on the planet today.
Right. We're going to run out of time in just a moment, so I want to come back to Paul, and I want to ask you this, Paul. You built this remarkable organization, Just Capital, that's really helped change the conversation in corporate America about these issues, and I'm so glad we're able to have this conversation. It's an organization that really cares about metrics and looks at metrics. So I'm curious how you think about the metrics for Just Capital in terms of what success will be for you and for corporate America ultimately. If we have this conversation in 2025 or 2030, how you will measure your own success.
Well, it's funny because as a in our board meetings, we always go through what are the top 3 things if we could accomplish either this year, in the next 5 years, 10 years. I have one and only one. There are many, they're myriad, but my number one is if we can focus CEOs on understanding how many of their employees are earning a wage that is below a living wage, certainly below the poverty line. They're actually 2 different levels. You said to me the one deliverable. Right now, there's something I want to say. There's over 10 million Americans that work for Fortune 500 companies that do not pay all their employees the poverty wage. Many of those companies are engaged in paying dividends and buybacks. What those companies are doing are actually arbitraging the rest of the tax-paying public, who are either through supplemental nutritional assistance programs or through the earned incomes tax credit, are making up that difference between the less than survival wages that the employees are making and then what the public has to pay from again, public assistance. So I don't want to see us continue to use the tax system to take care of employees that are simply trying to get food and shelter. I think there's something that for a person's self-respect, having a good paying job, having the ability to go home and provide for a family is extraordinarily important. It helps our society at every level. So if you said to me 5 years from now, what I'd love to see and what I hope happens is that, and again, we were talking about regulation, and again, the SEC, and trust me, Adena, heck is a hedge fund. I know, oh my Lord, I know what you're talking about. But the most important thing for me is these people who are working for companies and not making above the poverty wages, CEOs, board members, as well as shareholders, need to recognize the reason why we have this divisiveness in the country today is because we've lost our social contact. We've lost that connectivity. We've lost that understanding and empathy and compassion and sympathy for somebody simply trying to earn a living and have some self-respect. So that would be, for me, I just can't, when we get in the dividend or the profits discussion, I just sit there and think, no, the most important thing is, are my employees making at least at least something that gets them above the poverty line? Everything else, and this is just me personally, but it's also what the American public says too. So I'm just amplifying their voice. That's the number one issue.
Okay. I want to thank you, Paul Tudor Jones. Robert, I want to thank you. Adena, I want to thank you for a fabulous conversation. You helped us make sense of a period that often doesn't seem so sensible, but we very much appreciate you joining us today. I thank you for the conversation. I hope we can all do this, frankly, in person at some point and actually see each other and get together. Wouldn't that be a great thing? But let me just say, once again, thank you. For those who are watching, thank you for joining us this evening. Just Capital, as you've now heard, is an organization trying to really build a conversation and measure performance, and it's an important one. This is part of a series that they do called Building a Just Future, and you can check out more about that series at justcapital.com. Also want to thank Laurel Strategies for also supporting this evening's program, and my good friends at CNBC. Have a great night, everybody.
Much love.
Thanks so much.
Thank you,
Robert.
Bye, Adena.
Thanks very much.
Thank you, Paul. And thank you, Adena. Thank you.